All right, the federal debt limit has been suspended since August 2019, but today it's expected to be reset to the previous ceiling of $22 trillion. Joining us now to talk about how this could impact the markets is President of Wilsey Asset Management, Brent Wilsey. Brent, good morning. Always great to see you.
Good morning. Good to be here.
Okay, so let's start right from square one. What is the statutory debt limit exactly?
Well, let me kind of back up a little bit because, Jason, the first thing that I'm always asked when I go out and people see me, Brent, when is a correction going to happen? What's going to cause it and so forth? And this is why I'm kind of looking at this. This debt ceiling, this whole debt talk should be a lot more problems than it is. And I'll tell you one thing, too. I manage money for a lot of people. I'm always looking what can cause problems. And this is one that is so quiet, it's got me worried. The only negative I've heard so far was on Tuesday, Treasury Secretary Janet Yellen said that we need to be more concerned on this. There's problems, but no one's really talking about this because 2 years ago they didn't raise the debt ceiling. They kind of put a suspension on it. It's supposed to be $22 trillion. So they said, okay, let's not worry about it. Well, now that's back again. It's expired yesterday. This should be talking about this coming week because this can cause a lot of problems. Back in 2011, this is what caused debt problems. Actually, the AAA rating we had for the U.S. government, actually that was downgraded. We had the debacle in Europe. The stock market had a crash, and one day it was down 5.6%. Today that'd be a 2,000-point drop on the Dow. So this is a concern, and it's not being talked about, and it looks like we could run out of cash come October, November, but I'm just not sure why it's not being talked about more than it is because this can be a major problem. Debt, too much debt is never too good.
What does this mean for the average investor? I mean, how could this shake the markets?
Well, this is the problem. There's a lot of gridlock in Washington. They could go back to back in 2011 where they can't make any decisions, can't get things done. Again, it caused the big stock market correction back then. So you got to be prepared for it. And that's one thing I tell people. We're prepared for it, looking at it. And I want to tell people, do not take all your money and go to cash to try to prevent this. Make sure you have good quality investments that can handle it because we do have a good economy. I mean, we just had the GDP come out. It was up 6.3% for the quarter. What worries me is it could come down somewhat, but also there's so many things moving on right now, Jason. It makes it hard to say what is going to be the problem that's going to do this. And I've been through 22 corrections in my career here, so I'm not worried about this one, but you want to handle it properly. And if we had a lot of cash in the economy, it was going down. It was about 19.4 trillion back in January. Well, now it's back up to 20.4 trillion again. So what this can do is when there's a pullback in the markets, a lot of inexperienced cash will come out there, new investors, where they say, wow, buying opportunity. They come in and they buy these low prices or semi-low prices, and we don't have a full correction, which builds things worse down the road because you can't keep adding and adding. Eventually, you have to have this big downturn.
Okay, you say why not to worry? No Greece default or European debt problem.
Yeah, because people say, oh my gosh, back in 2011 it was terrible, we're going to have the same thing. Back then, Europe was having a major problem. Greece did have a default back then as well, where, and I did look, they've only paid, I think they borrowed like $340 billion from the European Union. They've only paid about $40 billion of that. But that's not the problem we're having now. And also, too, there's no discussion about reducing our credit rating again. And the reason I reduced it before S&P did is because they said they can't agree on things, and we're not agreeing on things now. So all this stuff, it could be pushed to the back seat because of the Delta variants. We do have the eviction notice coming up. I know here in California that's going to be a little bit different. I believe the governor has made it extend, I think, for 2 more months, but the federal government has not, so that could be a problem. So I think we're going to be fine here, but you always, one thing about managing money, I've been doing this for 40 years, is you always got to look at what can go wrong and then say, how can I handle that? So there's some bad things out there, some good things. And one thing, too, that we used to be concerned about, oh, my gosh, China owns, a third of our debt. Well, let me tell people right now, that debt that we have, China only right now holds about $1.1 trillion worth of debt. So that fear is gone. So we get through these things, but you have to know how to handle these problems when you have your money invested to make sure you don't make the wrong decisions and zig when you should zag.
Huh, interesting. Okay, you're back live and in person with your seminars. Any coming up?
Actually, we have one coming up on August 26th, which is a Thursday. People want more information on that, then go to our website, smartinvesting2000.com. And also, too, we have a great newsletter. A lot of this information we put on there as well for people. So go to the website, smartinvesting2000.com. A lot of great information there. And the workshop will be coming up August 26th.
Okay, Brent Wilsey, president of Wilsey Asset Management. Thanks a lot, Brent.
You're welcome.
All right, the heat is